afternoon and welcome to Pistach's Asian Midday Market Watch. It's the 27th of November. We are coming to the last month of the year. And our guest today is Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank. He's coming to us out of Singapore. Vishnu, it's always great to have you on the show.
Always a pleasure to start the week with you, Brian. Thanks for having me.
Now, Vishnu, as usual, we'll take a look at how the regional markets have performed in the first half of the day. We are going to start with the SGX. The Straits Times Index is down 0.36%, which basically mirrors the rest of the markets across the region. The KLCI is down 0.13. Shanghai is down 0.74. ASX All Ordinaries is down 0.61. The Nikkei is down 0.42. The Hang Seng is down 0.96. Rounding up the numbers, we got the Kospi, which is down 0.12. Now, Vishnu, it's a sea of red. Why is that?
I think a little bit of caution is certainly creeping into the markets for multiple reasons. I think on one hand, there was a sense that the Fed is going to pivot given softer inflation numbers. And then there was the whole cheer about the truce in Gaza, softer oil prices. So and last week we also had in the run up to last week we also had a whole slew of China stimulus to backstop the property market. So you could argue that markets got a little ahead and somewhat buoyant. But since then, I think China's shadow banking sector has run into a bit of trouble. There are investigations being launched into Zhongji, one of the largest shadow banking players in the industry. That entails some threat of contagion risk. So I think the China mood has taken a step back. Along with it is pulled back some of Asia. There's also a bit of coming to grips with the fact that the OPEC meeting might have been deferred, but that doesn't necessarily mean that oil prices will head lower. Despite having some friction within, I think the inclination to keep oil prices supported remains high. So markets will want to watch that later this week. In addition, even though I think markets are quite upbeat about the fact that US disinflation continues, the Fed may push back this week after Thanksgiving to say, guys, disinflation is great, but it's not sufficient. We're not shifting stance from our hawkish positioning. So all these factors means that the rallies that we've seen right up to Thanksgiving, they're probably taking a bit of a pause, a bit of a breather. So the mood is shifting a bit more cautious. And I think that is going to underline how we head into December as well. December, I think markets would really like for a Santa rally. The extent and the durability of those would be what's being questioned at this point of time. And I think the timing of it is such that because of the mix of data and the mix of, the mix of policy measures in China, on one hand, you've got loads of stimulus suggesting a huge desire to backstop and to support the economy. But at the same time, you also have, concurrently inflicting discipline on the various sectors, whether it's shadow banking, property, and so markets will also be somewhat more nervous as they wait for the CEWC, the Central Economic Working Committee, that usually announces the major thrust of economic policies for China, and that might be somewhere in the middle of December. So one might imagine until the December FOMC rolls around and until the CEWC are released, any optimism is going to be both restrained and perhaps even opportunistic.
Now, there's a couple of things you pointed out too, and obviously the shadow banking saga is finally unfolding. So we've heard mutterings about the shadow banking sector for years and years and years. Has it all come to roost now? It's just, as you said, just the first cracks of potential contagion that may take place moving forward.
I think at this moment, the question, and it may be a hopeful question, the question might still be, will Beijing let the shoe drop? Because there's also a sense that Beijing can backstop some of these, but it really boils down to what extent Beijing believes that individual players should be allowed to fail or perhaps even take a lot more responsibility. And so that's where they They do not want to have a blanket rescue, whereas they may just want to backstop the industry as a whole. What happens in between is what's causing the fear, because we know that the shadow banking sector is very, very tightly tied back to the property sector, local government funding as well, and it rolls back to the regular banking sector as well as household wealth. So these things are the moving parts here. And so whether policymakers are moving with a lot of information and confidence in cracking down, or there is some a risk of of blind spots not being watched, and that leading to like a 5 car wreck, which is basically a contagion risk. I think that's really what it boils down to, and I don't think anybody really has a concrete answer as of now. In fact, I don't think anyone even has a concrete sense of exactly what Beijing is trying to pursue, because these are diametrically opposed objectives. And one might argue they're trying to strike a delicate balance between allowing moral hazard to just be on its own horse, and also ensuring that at the end of the day, risks are not allowed to spill over to a point where it's too late to cry over spilled milk. So between the two, we're still figuring it out, and I think that at the very least, which is why I think markets today are realizing, at the very least, that requires some caution rather than just continued celebration regardless of what the outcomes are.
Now, Vishnu, finally, with the beginning of the week, what are some key events and data points this week that are going to move markets potentially?
Yeah, so one of those things that we discussed earlier was you get a second read of US GDP. I don't think people are going to be really shifting the deck, moving the needle on that, but they'll be watching for the details of PCE and core PCE. These are the preferred inflation measures of the Fed. They're going to see whether that allows the Fed to become dovish. Our suspicion is that the disinflation will be encouraging, but it would still fall short of the bar for the Fed to pivot per se. In the region, we are going to watch Bank of Korea, Bank of Thailand. These two central banks we think will remain on hold, but the communication around it and the growth risks and the inflation risks that they see could dampen some of the solid gains that we've seen in the Korean won and the Thai baht over the last 2 weeks. So there's some propensity for that. Markets will probably also be watching not just action or the lack of in this case. They'll also be watching words. RPA is going to be on a panel in Hong Kong, and the RBA new governor is going to speak. So I think markets are watching to see how hawkish she sounds, and if indeed Michelle Bullock sounds hawkish, the Aussie might try to lift off a little bit more. But the caution here is that if China sentiments are not upbeat enough, the outperformance in the Aussie and the Kiwi might have to give back some this week. So there's a lot to watch, and there may be some twitchiness around slightly thinner holiday markets.
Now, Vishnu, on that note, thank you very much for your insights. Thanks for coming on the show.
Pleasure as always, Mike. Thanks for having me, Brian.
We've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, and this has been BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out this video and podcast on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.